Good morning to Morning Live viewers. Welcome to Bottom Line. Well, we saw the JSE on Monday ending in the red, and of course there were a whole lot of other indices that ended weaker, and of course driving that weakness on the all share index, it was the resources stocks that fell almost 2.5%. The overall markets, the all share index ended the week at 0.79% down at 97,774 after achieving heavy losses earlier in the day. Let's not forget that about 2 weeks ago we touched an all-time high above 100,000. Well, volatility is still the name of the game when it comes to markets. The local bourse was pushed lower by the likes of financials and banks, down just over 1%. The biggest losers came from the industrials, shedding nearly 2% on the day. It was banking stocks that bucked the trend, gaining 2.5%. The rand weakened on the back of a weaker than expected, stronger US dollar. Let's take a look at that rand. The 30% tariff on some of the local goods entering the United States sent the rand to over 18 rand 30 to the US dollar last week. But the local unit managed to recoup some losses as the US reported weaker than expected jobs data. As we enter the week, Brent crude will be interesting to watch very closely. Let's take a look at that oil price in terms of how it performed. The prices have dipped to $75 per barrel to $69 per barrel. The decision to increase output comes amid increasing US pressure on India to stop Russia oil purchases to force Moscow to negotiate the peace deal over Ukraine. But oil prices remain elevated at nearly $70 per barrel, and we expect that the local fuel price adjustments will be announced this week, with some reprieve expected on the price of petrol. Still in commodity price, let's take a look at gold. The yellow metal is redeeming its safe haven status after poor jobs numbers in the US. It gained almost 2% on Friday. The weaker than expected US number in the US has strengthened a case for a rate cut by the US Fed. We know that gold tend to do well in a low interest rate environment. On the corporate front this week, we expect results out from Nedbank and the JSE. For now, we turn our focus on trading, and we look at the issue around the use of artificial intelligence when trading. It's also called use of robots. And this morning we are joined by Spumelele Mashian. He's a retail trader. Spumelele, thank you very much for joining us. We see this practice that is growing of using AI when people are trading, and we know that the FSCA discouraged the use of assistance from people or anything that is not accredited by the FSCA to guide or share any information on investment. Just tell us a little bit about this use of robot.
All right, well, thank you for having me. So basically what's happening is that AI has actually made it quite easier for people to be able to analyze charts and get just a all-encompassing data package. So, for example, there are websites like FinViz Elite, right, where you can just plug yourself into, get a free 7-day trial, and it can give you heat maps on all your holdings data, your ETFs, oil, gold, and all of that, so that now people can actually access those tools quite quicker, right? So, for example, most recently, there's this trend that's going on where people just plug in their charts to ChatGPT, and they just ask ChatGPT to please analyze this chart for me. And quite frankly, it actually does, but then it uses, of course, basic knowledge like your support and resistance levels. For example, I myself just tested this out with gold, and it looks like ChatGPT is actually looking for gold to hit new highs. So it's quite funny how this craze has actually been a trend recently, simply because people just want it a little bit easier for themselves. And as for regulations, I don't think the FSCA can regulate ChatGPT because it's not a person at the end of the day, and it's not rendering financial advice. It always states that, so it's quite a tricky field to be in.
What are some of the pros and cons of using this AI? I mean, we know that people have different experience and some people are actually learning how to trade. Would this come in handy?
Yes, definitely it would, simply because it doesn't go in depth as some of your financial analysts, for example, MJ Gibbons Khasi, would go in depth with it, right? So it'll just give you a baseline of what you should know. For example, your simple support and resistance levels, just telling you that, for example, if gold comes back to 3,320, that will be a nice support level for you to buy. And then you can actually even tell it to highlight those levels, whether using chart tool objects or anything, and then it can actually give you that information. So for a beginner, it can actually be quite a useful tool.
You say that you've tried it. What has been your overall experience, and you think it's something that you could try going forward?
Yes, I have tried it, and me being a technical analyst myself, quite seasoned one, I would actually recommend it to at least give you a sentiment, right? Because it cannot give you your zero float entries that we as technical analysts like to actually have, but then it does give you the overall sentiment and the trend. And it's actually a good thing for you to know what side of the market to be on. Because as we know, your AI tools encompass a whole lot of data that you might not be able to access and read in terms of your fundamentals, what Trump is doing or saying, and it encompasses all of that, and then just looks at the overall chart and says to you, this chart is looking very bullish on higher time frames. So it can help with that, just knowing what side of the market to be on.
All right, thank you very much. That's Phumelele Mashiane, retail trader in our Traders Corner. Well, join us again next week here on Morning Live. And well, Morning Live continues with Sakina and Lian after the break.